All right, let's talk a little oil here. We've got crude oil down more than 1.5%. 36.66 a barrel. It looks like Saudi Arabia and Russia have agreed to keep deep production cuts in place into July, but the rest of OPEC Plus is not yet on board. And that just as hopes are growing that reopening economies could push a big increase in demand for oil. Let's talk about this now with John Caruso. He is a senior asset manager at RJO Futures in Chicago. John, good to see you again. So is extending these cuts enough to boost the price of oil?
Well, I think you've got to kind of take a look back and look where we were and in terms of how far we've come. The price since the July contract low, we've rallied more than 100% right now. So I'm actually in the camp that believes that we could see a 3 to 5% correction, a little bit of a setback from here. We are seeing some softness in the market this morning, perhaps a little bit of a buy the rumor, sell the fact type setup in the market. I think the one thing you want to really keep an eye on is compliance going forward. We do know that there's the Saudis and Russia's, there's a handshake agreement to extend the cuts through July. But from what I've seen, compliance of the 9.7 million barrel cuts per day back in May was only running at about 74 or 75%. So there was some cheating going on in the market. I really think you need to watch that going forward, and you're going to see that in the weekly inventory numbers.
John, you know me, you've been on enough. I'm always looking out for oil price spikes somewhere, but I think I finally have a case to be made that maybe we do see an oil price spike this summer, early fall. Look at the market, look what the stock market's doing. FOMO, rip-roaring rally. Why hasn't oil caught up yet?
Why hasn't it? I'm sorry?
Why has it not caught up yet with the market rally? Just the broad market rally in stocks. Clearly the market is saying something.
Sure, absolutely. Well, I'll tell you what, I mean, this reopening of the economy, it's happening very slowly. I can tell you just from, being here in Chicago, that there's still a lot of downtown that is still very quiet right now. A lot of offices haven't reopened. So you're not getting that commute to the bigger cities every single day. So the demand side of the equation is still very much, there's a lot of question marks hanging around demand going forward. We have certainly seen a big step forward in terms of the supply-demand fundamentals with the production cuts. Slowly, the economy seems to be coming back online. But if you look back at yesterday's inventory numbers, we did see some softness in the products. We saw some bigger builds than expected in the products, and that certainly is a factor with demand.
John, looking back at how we emerged from the Great Recession, does that tell you anything what might happen with oil as economies start to open up?
To be quite honest with you, I mean, going forward, after perhaps a 3 to 5% correction here in the near term, going forward, we actually are going to be pivoting to being very bullish on oil. I do think you could see oil run up into the mid 40s at some point over the summer. There is a gap in the market up at 42 that I do think the market's going to likely close at some point from July to August. After perhaps a small correction here in the market, we're going to be looking at becoming more bullish on the price of crude going forward.
But John, do you think that fundamentally the pandemic has sort of shifted oil markets going forward?
Sure. There's no question about it. Until we start to see lower viral loads, we actually have seen lower viral loads, but everybody's kind of awaiting, are we going to see that second wave hit us in the fall time again? So there's still a lot of question marks in terms of where demand is going to be a year from now. But I do think over the course of the next couple of months, it's not going to shock me to see the price of crude oil reflate into the $40 level.
And John, longer term, I think the pandemic has showed us that we can get our work done at home. We can get it done at home. What's the longer run outlook for oil, do you think? Maybe we're taking less public transportation. Maybe we're driving to the work less. Certainly, maybe we're taking Uber and Lyft less.
Sure, absolutely. The game has completely changed going forward. We're going to be monitoring those developments going forward. I do know that in the back half of this year, OPEC is likely going to be tapering these production cuts. I believe after July, they're expected to fall back to 7.7 million barrels per day through the end of the year and then lower it even beyond those levels out into next year. So, there's a lot of question marks in terms of demand. Like you had mentioned, the game has certainly changed in terms of transportation. And there's a lot to certainly be looking forward to in from that regards.
All right, John Caruso, Senior Asset Manager at RJO Futures there in Chicago for us. Good to see you again.
Thank you so much.